3 stocks you need to be looking at in January. Disclaimer, we do not own any of the stocks mentioned in the slides, and as well, none of what we say is financial advice, purely educational. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. Now guys, these are companies on our watch list, and the 3 companies that we will be looking at is number 1, Inari. Big news happened over the past couple of weeks. Number 2, TechCycle. Also big news and big movements of the share price over the past couple of weeks, as well as LMP Global, a pretty successful IPO.
Yeah. Okay. Again, disclaimer: none of what should be is buy or sell. This is just we're just looking at the management's execution and how have they been performing.
But I know most of you have watched our videos for a very long time, so you know exactly what we say. You probably bought it and probably think that we shouldn't say anymore, but we gotta say it, you know.
Yeah.
Okay, so we start with
Inari.
Inari, not the sushi, but the stock. I believe this is the largest tech manufacturing stock in Malaysia at around 9-10 billion market cap. It's probably lower now. So you can see it's dropped about nearly 40% since the high, which is in November 2021.
Yep.
And I think a year to date, it doesn't look like that bad. Maybe if I can eyeball it, it's maybe 10, slightly under 10%, somewhere there. So Inari, big news happened, right? Last week or so. What happened actually? Or we'll go into that a bit later on. But yeah, Jonathan, take away.
So if you look at their quarter-to-quarter performance, it has been doing well so far.
Yep.
Nothing's bad has been happening. It has been actually outperformed better than quarter 4 of financial year 2022, just the quarter previously. So if you look at the top to bottom line, actually there's nothing much to comment on. The only thing that is dropping right now is their gross profit. It's down like 16%, but they managed to maintain their costs in terms of their operating expenses. So all of those have resulted them to only reduce their PAT or profit after tax about 0.5%. So it's not too bad. Okay, so cash flow also has been pretty strong lately. That's because they managed to get more. They managed to convert more receivables to cash. They also managed to sell more inventories. So all of those have actually increased their operating cash flow. So that's actually very decent. Okay, so this one, if you recall, they actually did raise a PP, private placement. I believe it was 2021. I think they rose about the largest private placement in Bursa. Yeah, so it's about 1 billion ringgit. And they haven't actually really deployed much of the money yet. So if you look at these unutilized proceeds, right, there's still about 1 billion sitting inside their bank that they haven't really spent in terms of capex yet. So we'll see whether they will start deploying in these next few quarters or so.
Yes. Yeah. And there's actually apparently a reason, right, that they wanted to.
Yes,
did they state the reason?
No, actually, so far they only just there.
We have a little guess, but later on.
Yeah, sure. Yeah.
Okay, so there's this JV with China.
Yes. Basically, this could be their potential capital expenditure that they may be deploying their money to, but they haven't really confirmed yet. It's just saying that they are signing MOU. They are just like formally announcing that they are working together with this China company called CFTC, which is the EU Equity Investment Fund Partnership and also the CFTC Equity Investment Management. So basically what they're doing is a complementary business to Inari's existing OSAT business. And they're also in the pure play semiconductor foundry space. So yeah, that is nothing much to comment. There's no numbers to actually to look at how much revenue they are contributing or how much profit they are bringing into Inari. That is haven't really stated officially to the public. But anyway, so this is our takeaway. Now you need to know that Inari's major customer, it is Broadcom. And Broadcom supplies those chips back to Apple. So in the end of the day, Apple is the major customer that is holding they are paying out the money to them essentially. So they are the big boss. And you need to know that recently there's an announcement that Apple is going to reduce their they're not really going to collect more chips from Broadcom that is manufactured by Broadcom. They also state their reasoning because they want to like diversify their risk, or they are trying to like go through another
control
route.
their costs essentially, because
correct.
Apple has relied, and you guys can actually Google this online, you can see how Apple products are made globally, but essentially they've relied on outsourcing virtually everything except the IP part, except obviously the phones and all that, and then the distribution. In fact, maybe even distribution, so they outsource a little bit.
Right, correct.
Like Mac City and all that. So yeah, they've been in control of the brand, and that's worked very well for them, right? Because then you only really have to focus on one thing, right? Which is the product development / design and the marketing. So it seems like due to probably geopolitical risks, they want to control their costs a little bit more.
Correct. So actually from my studies from Inari, they contribute majority of the Broadcom is their major revenue contributor. But according to Public Invest, which is one of the analysts in the public bank, so they actually stated that only 17 to 18% of the revenue will be affected. So it's actually not that serious.
Well, it depends on this 17-18%. What's the margin profile? So if the margin is very big, then yes, maybe sales drop, let's round it off to 20%. But if margin is good, if it's like 50% above the average for the other segments or companies, then you're looking at like half of 60%, right? It's very possible.
Correct. So, but it's still, I would say the portion, I was actually expecting it to be more. Maybe even 30 to even 50%, but surprisingly it's only 20% at most. And the third takeaway is that they are currently working with China. So they are doing business with the US, also they're also doing business with the China side. So that is an advantage of you being in Malaysia. I can work with both parties. And the fourth thing is that the company is dependent on the growth of radio frequency again. If the demand for radio frequency start to deteriorate, Inari's business also start to drop. And last but not least is whether this price is actually already priced in or not, the valuation. If you are, I'm not sure, I think this one is like capture like the later on effect of the sudden news on the pulling out from Broadcom. But I think recently Inari also went up a little bit. I think the bottom was around 2 ringgit and 40 plus cent, and then it went up to 2 ringgit and 60 cent. So whether is it priced in or not, so to me it is still quite a expensive business. I mean, in terms of valuation, personally, I think I would hope that they will actually still drop some more if I will actually plan to invest in this. Looking to buy.
I mean, the simple calculation is if we drop 70-80% revenue, but the share price hasn't dropped that amount, either mean two things only. It means that people don't really care about this drop, or they don't think the risk is that big, or they're not aware, they're not realizing how important this could be. And so the market hasn't moved yet. And if you are holding the stock, it means that maybe you want to think of this aspect, right, of the company. And I think the one thing I'll add to tie back is the private placement. So it could be that they already foresaw something like that happening. So that's why they're raising money to do something new to, level up. So perhaps that's why the market hasn't reacted the way it has reacted.
That is a good point. And I think in the next segment, we're going to be talking about tax cycle.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. Right, now we look at tax cycle, down 23% from all time, but up 30% year on year.
Yes, correct, year on year.
Right, this is a stock that I think our friend Peter Lim is a big fan of. Go check out the video here. It's here. No, here. We did on a review on his semiconductor book. Really good.
Right.
Okay. Yes, so tax cycle is in the recycling business, waste related.
Yeah,
right?
waste management business.
I always thought that it was a business that had great potential because the industry they were in.
Yep.
And then they are small caps, so small caps always get us excited, right? But go.
Yeah, okay. So you look at their earnings, right? It's actually nothing much of a wow factor, right?
Yeah, it's very yo-yo as well.
Yeah, it's very yo-yo, and the up also is only up like I would say around 30%, 20 to 30% only quarter on quarter. Yep. So it's not a huge jump in terms of profit or even revenue. So if you look at this cumulative quarter, they only up like 20% in terms of top line, and then their bottom line, which is their profit, is up 25%. I mean, this shows that they have achieved operational efficiency, so that is actually pretty good. And they are currently in a net debt position. They have a lot of factories, I presume, because a lot of it is coming from the non-borrowing side. This is nothing much to comment on their balance sheet. Cash flow also has been pretty steady, I would say. Yep. Yeah, I mean, you can see that they have been hovering around 8 million of operating cash flow. And the reason why the share price recently pumped, and actually just now that price action, it was recorded on the 11th of January. So as of today's recording, which is today is 16, right? Is it 16?
Today is
16. Yeah, so 16, I think the share price went up to 80 cents. So yeah, it actually went up 2 times. And the reason why it went up 2 times is because of there's this one-time profit. And they are actually disposing of 2 factories. And these 2 factories will actually give them a cash net gain of 13.7 million. So if you recall, previously is that, let me see their profit. Okay, so they are now making about 5 million, right, cumulatively. So if you add that 30 million, it's going to be 18 million, which is going to be 3 times more than their previous financial year. And that excludes the quarter 4's earning that they haven't announced yet. So it'll be even more. So the final takeaway is that whether there's growing demand for recycling, definitely there is, because there's too much waste, right, in Malaysia and even globally also. So yeah, there's always demand for this type of services. And the reason why it went up is because of this one-off profit I've mentioned earlier. And the profit is 2 times up compared to financial 2021. However, I think based on that previous timeline, which is the share price was up 30%, whether is it still priced in. So apparently it wasn't priced in. There's still like more upside, it went.
And you're saying this because you're comparing it to assuming the valuations remain the same, or how are you coming to this?
Okay, I'm coming to this is because they are making a super normal profit as compared to its usual norm. So obviously they can fetch at a slightly higher valuation because of this one-time profit. But then again, this is not sustainable because this is just a one-off only. And if you're actually a FIRL Pro member, you will know this news because I actually posted that.
Yes, correct.
And not sure whether they will make money or not or lose money. Yeah, so that's another topic for today.
The only thing, just to cap it off, right, is that this may be hidden, but straight away I can see that the fundamentals are improving.
Correct. Operationally.
So if you ignore the once-off gain, the share price has gone up 30%, but the fundamentals have gone up as well around there, right? I mean, not around there, but about 20%, right? When you quarter on quarter, correct?
Yeah, correct.
Yeah. So one question that I have that obviously I think all of us should look into is, what drives the business? Why is it choppy? So we know that waste management is only one way, right? Because waste always increase.
Yes,
right?
Correct.
There's more people and stuff like that. And every day we're using new products, eating new types of food. You know, the packaging industry we know is booming, right? So more packaging means more recycling and all that.
Correct.
But why is it that in spite of the way the industry is moving, you get like choppy movements like that?
Okay.
Right?
I think one of the reasons is because although the government did push a lot of initiative on this type of thing, but I think it's not strict enough. It's not like a heavily regulated kind of industry. Although it is regulated, but it's not really that strict. That's why you see like there is some instances where companies, manufacturing companies actually dispose their waste to the river or even sea. I mean, because I live in Subang, there's a lot of water cuts due to like companies disposing waste in the river. So that happens, and yeah, in order for them to save money, you don't want them to pass it on to a waste management company, right? Why should I spend when I can just dispose off for free into the river or somewhere else? So I think that is one of the reasons why the financials is not that great. Okay. It's because it's not a strict regulation enforcement at the moment. But if let's say the government really take this seriously, right, and they start to impose like fines or whatsoever, or like they take this matter pretty heavily, then maybe you'll see this business to turn around or be even improve in the coming years. Yeah. So
So, for me, it's still a mystery why it can be so smooth, right? From 13 to 18, give or take.
Yep.
And then suddenly, it start to taper off. Something for us to investigate.
Yep.
And the last bit is to take into account what is the additional profit that the company will make, not because of the gains that they've made, but because of getting rid of the two factories. And how does the depreciation actually affect? So I'm not sure how long they depreciate the two factories, but since it's 13 million, let's assume that they depreciate over 20 years. That would imply roughly 650,000 of depreciation every year.
Right.
So how much does that add to the bottom line? Right now we can see that cumulative quarter
10-30%.
Yeah. So that is also quite significant, right? But these are some things you guys should investigate. And is it priced in? That's for you to decide. We will look at the next stock. Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive. Okay, LMP Global just IPO'd, so it's up, according to Google, it's 12.75%, but I believe it's up more from IPO price, correct. Right?
I think it's around like 30 to 40%.
30-40% from the IPO. Yes. So that means it IPO at around 40 cents.
Hey, sorry. No. It is actually up more, because I remember their market cap was around 160 million.
Right. So if you compare 30 cents IPO.
Okay. So it's actually up more than 2 times.
Great. Yeah. So this is some of the financials. I think we don't need to explain much. You can pause the video and see what's it like.
Yeah, it has been doing well.
They've taken on a little bit more debt in Q2 2022. Do you have a pulse on this?
Not really. It's more of like their factory. They're just going to expand their production for the customers.
And cash flow is down big. I think that's a big question that I would be wondering. Why is that the case?
Okay, so I think one of the reasons also we haven't looked at the 4th quarter yet. So, I mean, right now it is still performing like, I believe is 50 or 60% towards if compared to financial year 2021's operating cash flow. But the reason why free cash flow is down so big is because, again, they are spending money on capex. They are expanding their production. Cause also they went IPO right for it. And so actually nothing much to comment on. If you look at their operating expenses, this has also been increasing quite sharply actually. Don't know, maybe it's just there's more cost to manage their operations. But anyway, this is a very short one because they just recently IPO'd, so there is actually nothing much to talk about. But you need to know that their year-on-year revenue growth has been around 30%. So whether is this sustainable or not, that is a question to ask. And another cool fact about LMP Global is that their customers are actually in the solar industry. They did disclose that they are serving First Solar as one of their major customers. I believe they contribute about 50% of the revenue. So it's highly dependent on the solar industry. If the industry is growing, definitely, LMP will definitely benefit. And another thing is that they are actually fetching a pretty premium valuation compared to these peers, because the peers, I believe the most, in terms of PE valuation metric, I think the most expensive is around like 10 times. So LMP Global is fetching 22 times. So there's actually a pretty high distinction between what their peers and L&P Global. And also, I think we did mention this L&P Global company heavily in our deep dive.
Yes, in our Masterclass deep dive, which if you want to get it, you can actually, we put an archive, right? And link in the comments or description. But yes, go on.
Yes. So basically, there's actually an alternative company to L&P Global, and it's also much more cheaper.
Yes.
If you want to know more details on it, please do check it out. The links is in the description.
And it is also a company that we cover in our FIRL Pro program.
Yes.
Right? So our FIRL Pro program, essentially you get 2 to 3 reports every single month on companies, right? So it speeds up your research. We like to say that, you finish 1 cup of coffee, you finish our report as well. Very, very quick, succinct, easy to understand, doesn't have a lot of jargon, stuff like that. Some of the performances of the stock that we cover and put it into our FIRL Pro portfolio can be seen here. Obviously, we have removed the names, keep you excited. I believe Master Pack will be, I think, E or F, one of those two. And so we are looking forward to check the January one, which is happening in a couple of weeks after Chinese New Year or midway. But if you are not too convinced on whether you should hop on the program, you can check out a free sample, right? We got one very nice free sample for you to check out to see whether it's something for you. And yeah, guys, thanks for watching all the way as usual. Appreciative of your support, and I hope to see you in the next video.